So if you guys can hear me. Side of the very iconic 432 Park Avenue. Check this out. This is pretty much the very start of Billionaires Row. This is the iconic 432 that was developed by Harry Macklowe. And what a better place to start than right here, am I right? So we have a few things to talk about today. Obviously, yesterday we briefly dove into CPI, right? CPI, or the inflation number, came in slightly hotter than expected. We had about 3.1% inflation when many experts out there were predicting we would head back down into the twos, about 2.9% CPI. But there's a lot of encouraging things happening in the market today, one of which I want to point out in particular. And if you want to follow along with us, if you have your Bloomberg terminal up, TradingView, whatnot, if you look at the ticker symbol IYT, okay, ticker symbol IYT, that is the BlackRock iShares US Transportation ETF, right? And a lot of times we talk about Dow theory. We've talked about that many times, which essentially states that it's a financial theory, right, that says the market is to be in an upward trend if one of the main two averages, right, the Dow Industrials and the Dow Transports, advances above a previous important high. And we are just starting to see the transports close. This was the first close, record close, since May 10th of 2021. So we're starting to have the market broadening out a little bit here. We're starting to see the small caps, which is the Russell 2000, start to participate. We're starting to see the micro cap stocks and the micro cap indices just starting to participate as well. That is the iShares micro cap ETF, the IWC. And then last but not least, we have the transports, which are now rocking into new highs. This is good news for the market, right? I think one of the main deterrents and what got people a little bit squeamish about the market in general is that all of the gains throughout the market have been concentrated into a handful of select stocks, the Magnificent Seven. Now, what we want to see from the emergence of from a bear market to a bull market, usually what you'll see is all of the leaders will come out first, right? So the leaders will show their face. And those are the stocks, the ones that are right out the gate, are usually going to be the ones up and out first, and which will go up more so than the tier 2 or the tier 3 stocks. So in phase 2, right, when the bull just starts to break out, you'll start to see those particular stocks, the Mag 7, kind of come back. They'll start to correct, they'll sell off. And should the rally be sustained, you want to see sector rotation. So you want to see money coming out, profit taking out of the Magnificent Seven, and some of that money being recycled into Russell 2000, into small caps, into micro caps, into the transports, right? So I'll take you on a quick look behind the computer here. So this is the iShares US Transportation ETF. And I think we'll zoom out on a weekly time frame just to make it a little bit more clear for everybody. This has really struggled to come out here, and it's been quite truncated, if you will. But today was the first close into new high territory. So we have a record close for the transports, which signals broadening strength into the market, which is good. And we see this just at a time. That was the YouTube studio, by the way. We see this just at a time when a lot of those larger cap stocks are kind of taking a pause and reeling in, so to speak. Last but not least, everybody, go ahead and check your emails. It was a little bit late, but I did send out the 3rd issue of our Behind the Street newsletter, which is our free financial newsletter that we send out to the chat every other Thursday right as the market is closing. Okay, so if you want to read that, if you want to sign up for the newsletter, just scan the QR code on your screen and punch in your email, and we just sent it out. Now, this week's issue was titled "Experts Predict Massive Stock Market Crash. Here's Why They're Wrong." That was the title of the newsletter, and we talked about a lot of the things that I just reviewed, right? From sector rotation, we gave a little bit of history of previous bear markets, particularly the 2008 financial crisis, all the way leading up to when we came out of that bear market in 2012. And we talked about a deep dive under the hood of the market, right? We spoke about the Russell 2000. We spoke about microcap stocks, home builders. We went into sector focus, semiconductors, biotechnology, transports. I mean, we covered a lot here. And last but not least, we did a deep dive into the manufacturing sector in the United States. We did a little bit of a tutorial on how to build these specific models so we can have a little bit better visual of the manufacturing sector in the United States. So once again, if you haven't already, just check your email and let me know what you guys think. This is the 3rd issue of the Behind the Street newsletter this year. I tried to make it very short and concise because some of the feedback I've been getting is that it's a little long. So just so you know, this is usually about 10,000 words, and I have to shellac it down to about 2,000 words. So just to let you guys know there. Oh, and by the way, if you want to see a new property tour, I just filmed a new property tour of our triplex listing, La Botanica, 619 East 6th Street in the East Village. Unbelievable property. It's a $4.595 million property, and I think you guys are going to like it. It's very, very unique. And yeah, so I'll go ahead and close up the laptop. Let's get the stream started. Thank you all for joining. Appreciate it. All right, let's get started here, friends. Let me just get that QR code off the screen. Turn off the Wi-Fi. And we're as good as gold. So I see sunshine after rain. What's going on? Our good moderator, thank you so much for being here on this cold Thursday night outside of 432 Park. John Casey is here. What's up, John? Appreciate you. I see Jeff W277. Thank you. DM. Welcome. This is Tom. I just received the newsletter. Let me know what you think about it. I tried to do a deep dive into sector focus just to kind of broaden it out a little bit. Buy the book is here. Welcome. Appreciate you. Peter, what is going on? Thanks so much for joining us. Yesterday 15. I appreciate you. Ike Love says, I appreciate a longer newsletter. The more information, the better, in my opinion. Yeah, I'll try to keep it at a happy medium, a happy mix. I understand that, a lot of the financial talk can be a bit, dry for some. So I try to make it as entertaining as possible. I appreciate that, though. Thank you all for reading. This is 420. Stunning. I love taking a look at it each night. Lance is here. Says, happy Thursday. What is going on? Swearworks says, how's the storm? Not too bad, honestly. We got a little bit of a northeasterner, but guys, the snow is gone in like 24 hours. There's still snow on the ground in Central Park, but I mean, it's all gone. Pretty much all gone here. Sally, what's up? Carol S. Always a pleasure. Brad's Brain says, I'm not understanding why you'd say new highs in the transports ETF would be macro bearish. I haven't read the newsletter though. Oh no, so I was kind of making a joke on Twitter. I think Brad, you may be referring to my tweet. So there was some big news, and I think this is monumental news in the market that not too many people are talking about right now. Today, the transports, the U.S. transportation indice, right, of the ETF, just hit a new all-time record high. I should say a closing record high, because an intraday high, it's actually traded at higher prices, but we just got a new closing high, which is extremely, extremely bullish. Very, very, very bullish. Right? If anybody's heard of Dow theory, okay, I actually wrote a piece a while ago saying that I've revised Dow theory a little bit. Dow theory essentially states that you have to have one of the two major Dow indices, right? The Dow Transports and the Dow Industrials making a new high corroborated by another indice in the market to show strength and a broadening breadth that we have entered a new bull market. Now, I've oftentimes said that you can now substitute the Dow Transports for a semiconductor ETF, like the SOX, right, the Philadelphia Semiconductor ETF, mainly because semiconductors, in my view, are going to drive the vast majority of new innovation in the market and in the economy as a whole, not just in the United States, but on a global scale. But the joke I was kind of making today is that, you have all of these signals in the market that are really enforcing the trend that this is a sustained bull cycle, but you have all of these macro guys and gals coming out on the mainstream financial channels and, on podcasts, trying to spin any little positive piece of news to be bearish that the market's going to crash. So I posted a little bit of a, maybe like a condescending tweet, just saying that, hey, the transports just made a new all-time record high today. I'm sure the macro people are going to say that this is somehow bearish in nature, but no, it's very bullish. I was just kind of making a joke. Michael, what's up? Says, hey, Tom from Corpus Christi, Texas. How's it going? Things are going good. It's a beautiful night in Manhattan. It's a little cold, but the good news is it's not windy. That's really all I care about. I don't really mind if it's freezing out, just as long as the wind's not blowing. That's really all I care about. D is here. What's up? Good to see you. Thanks so much for joining us. Daryl is here from Chicago, Illinois. Black Valley says evening. Photos from around New York. Trust you were out in Central Park getting some good photos. Appreciate that. Let's see who else we got. Crypto Meme, what's up? Good to see you. Michelle says, hey Tom from Michigan. Kyle. Wow, Justin S says they are expecting 40 to 50 mile an hour winds here in upstate New York tonight. Oh, upstate. I was like, yeah, maybe not going to be out. Maybe not going to be out streaming for too long tonight. But you know, one thing I wanted to briefly touch on tonight, kind of piggybacking off of what we were saying on last night's stream. There's a lot of people calling for irrational exuberance, and in the newsletter that I just sent out, I actually had to take some screenshots on my computer of some of the headlines in the media. Now, I mean, to be fair, okay, a lot of these headlines of, you know, the world's gonna fall, the market's gonna crash, everything is super bearish. A lot of those headlines were from Business Insider. Okay, and that is just like, if you want to talk about bottom of the barrel, dishonest, fake news, you know, I mean, Business Insider is like the pedestal of that. So, I mean, take that with what you will, but still, in general, I've still been seeing a lot of bearish, crazy claims out there. And that's actually what you want to see, by the way, okay? That's actually what you want to see just at the start of a new bull market. You want to see a lot of people denying it, right? You want to see really the vast majority saying, oh, it's not going to last. The rally's unsustainable. Valuations are getting extended. The U.S. economy's in the tank. You want to see people pessimistic on the initial rally. Okay, that is, you know, if you ever read anything from Richard Wyckoff, you know, Charles Dow, like that is exactly what we want to see. So in the newsletter, I sort of wrote that you'll know, the market will tell you when things are in irrational exuberance, right? Because every single asset class will be blowing off. And I said, if you want to look at the number one, you know, risk on sort of high risk asset class there is, right? Man, these cars are nice. I'm not a big car guy, but this is the Ferrari showroom here, right on Park Avenue. Very strategically located, by the way, right across the street from Citadel. But anyway, you have the number one, I would say, speculative risk asset class, not even hitting new highs yet. Once you start getting into new high territory in a lot of this crypto stuff, right? And again, you don't have to like crypto, you don't have to buy it, you don't even, you know, you could think it's the biggest fraud in the world, but you should still pay attention to it because you can draw some clues to the market's risk appetite. And once you start to see, which, you know, I think we will see in this cycle, you know, Bitcoin rocking into new record highs, you know, that's when you can kind of, you know, have your eyebrows up to say, okay, the market is getting a little bit frothy and irrational. We are very, very far away from that. You know, you don't even have a lot of these tier 2 and tier 3 stocks that I like to call, you know, rocking into new highs yet. You only really have the very, very high quality, you know, mega cap, you know, earnings power, sales power, return on equity, pre-tax, after-tax margins, all of those type of companies are rocking into new highs. Once you start to see that rotation into the small caps, into the micro caps, and the market starting to broaden out, which we've just started to see over the past few weeks, that's when you can kind of say, okay, this is going to be a sustained bull. And probably about 20, 30 weeks into the bull, that's when you start to get a lot of that irrational, you know, exuberance, if you will. What do you guys think about these Ferraris? Would you rather have the blue one or the orange one over here? Now, I'm not a car guy, but if I could just choose, I think I'd probably choose this bright blue one. Anyway, hey, DC322, what's up? Swearworks, it's interesting to see the new mega buildings in New York City. It is, and we're actually getting some more big mega buildings in New York. Ivan Hernandez, what's up? Mitch, welcome. I know Brad's brain says that's why I'm always confused when you say you enjoy Peter Schiff. I like Peter Schiff a lot. Now, the problem is in the real world, right, assuming we had, you know, the Federal Reserve not manipulating markets and artificially suppressed rates, you know, Peter would be totally right. You know, if we had a world where end the Fed, which I agree with Peter's thesis on that, but I mean, you kind of got to go with the trend, and things really aren't as bad as they've seen. Earnings have been good. Earnings have been good. It's just a lot of the smaller companies haven't been so good, right? You're starting to have the big behemoths, you know, have more and more and more earnings power and become absolute cash cows, and then you have everything else. So the market's just getting bifurcated, in my opinion. Hey, Kyle says expensive real estate. Wonder how many Ferraris they will sell. I mean, I don't know. Can you even buy a Ferrari in there, or is it more just like a showroom? I don't really know how it works. I've never bought a Ferrari. Probably never will. This is the Seagram building. This is actually my favorite office building in New York City. This black one right here. It's my all-time favorite. Hey, Brian, good to see you. What's up? Andrew Lee says happy Lunar New Year. You too. Thanks so much for those well wishes. I appreciate it very much. I think you're seeing, you know, some blow off top action in select stocks, which will probably have, you know, 20 to 30% corrections along the way. You know, like SMCI, Supermicro Computer, which we've been watching for a while. I think that closed today above $1,000 a share. So, you know, some of the power here, you know, in these individual stocks is showing its face. And this isn't the type of action that you see in bear markets, okay? You don't have, you know, 4 weeks up in a row, you know, a stock going 150%, up 4 weeks in a row during bears, right? And there's a reason why those type of moves happen, right? It's because of the earnings power. It's because of the sales growth. All right, here's a better view. Look at that. We are now across the street on the other, I should say the west side of Park Avenue, looking at the Seagram building. This is my all-time favorite office building in Manhattan. Look at that. Hey, Timothy England says greetings from Iowa. What's up? Good to see all of our viewers from Iowa. Very cool. You know, just look at Facebook. This is actually another cool shot of 425 Park. I said look at Facebook. Meta. Now, it's funny because I think Meta will start to catch on before the name X catches on, right? So obviously, Mark Zuckerberg did the name change from Facebook to Meta, and Elon Musk did the name change from Twitter to X. Which name change do you think is going to catch on sooner? I think it's probably going to be Meta. I still can't call that thing X. I just don't get it. Anyway, but let's quickly revisit the last earnings report from Meta. Profitability at the company more than tripled. Okay, I'll say that again. Profitability, you know, for all of these, you know, analysts out there that say, you know, companies are doing horrible. No. Meta more than tripled its profitability last quarter. Okay. Now, they did that through several reasons. They cut about 25% of their workforce. They laid a bunch of people off, right? And they doubled down on what they're good at, which is the core advertising business. And essentially they use their very, very lucrative ad business to subsidize the losses for the metaverse and the Quest headset and all that. So, you know, Mark Zuckerberg's year of efficiency turned out to work pretty good. I mean, that's another stock that had a 77% drawdown. A lot of people don't remember that, including myself. I have to remind myself all the time. Meta stock in 2021, peak to trough, declined over 70%. I think the exact percentage basis was 77% decline. 2 weeks ago, we just broke new all-time record highs in Meta. That's a new emerging leader in the market. I mean, that could run significant amount of time in terms of duration. Anyway, someone's asking, Tom, why is this your favorite office building in New York? Well, it's a good question. The main reason is the following, okay? This is East 52nd Street and Park Avenue. I kind of walk to the corner just so you can see what I'm talking about. Now, they built the building so far away from the street. Look at the street. You have this huge sidewalk here, and you have almost like this big patio. You have two very, very big sort of, what is it called? Fountains right here. You have two gardens, actually four gardens. You have 1, 2, 3, 4 on the other side. It's just like a very, very big, massive space. And it's a lot of fun to come here in the summer, particularly on your lunch break. You can sit down on the steps by the fountain, you know, eat your lunch. And since the building is, you know, so far away from the street, I mean, look at all the other buildings, right? It's like right on top of the street. This one is so far away that right as you're walking out of the doors from your office, you get a pretty cool view. I'll show you, hold on. Look at that, you get a pretty cool view of 425 or 435, 432, my God. I'm exhausted today, as you guys can tell. Park Avenue right here, 432 Park. You can see all the skyline of the city. And this is your view right as you walk out of the office. Pretty cool, right? And look who we got over to the left. That brand new building, that is 270 Park Avenue, the brand new JP Morgan Chase office tower. Hey, Colton Manning, what's up? Hey, Patrice 2020 says, good evening, Tom. Got your newsletter. Looking forward to reading it. Thank you so much. Appreciate it. So it seems like everybody's saying X is going to catch on. Someone's like, nope, never will. Troy Hatman's like X. Brad's Brain says, Bill O'Neill would love SMCI. What a chart. Oh, for sure, yeah. And I mean, right as it was emerging out of that big base, you could hit that right into all-time record highs. And look, those are traditional, and Brad will sort of know what I'm talking about here. It has every single can slim metric you could think of, right? Though that is the definition of a true market leader. And that's why it's so important, right, to talk about these stocks and kind of do a post-analysis. You know, think about all of the stocks that are up and out into new all-time record highs right now in the market, okay? And then kind of work backwards and try to understand, okay, well, why are these particular stocks trading at all-time record highs? And chances are, right, chances are there's going to be a distinct reason for that. It's going to have explosive earnings growth. It's going to have explosive sales growth. Great return on equity, pre-tax and after-tax margins, right? There's a reason why these stocks gain so much traction is because, you know, to go back to Richard Wyckoff and even Charles Dow in Dow theory, the people who move the market are the composite operators, right? Which is essentially big institutional investors. And institutions employ some of the best and brightest people in the world. And they do research on companies better than anybody else, and they know the quality, and they buy quality. So let's say if you're working at a Fidelity or something like that, right? And you're working for a big mutual fund manager. You know, in your morning meeting, you know, when you're talking about the idea generation, everybody's going to be in the top stocks for those specific reasons. The earnings power, the stock or the company is addressing a huge total addressable market, so the stock has a lot of runway. And once you start to kind of, you know, understand the patterns of these institutions, what they look for, it really boils down to how great is the company, how much money is the company making. Look at all of the biggest stock market leaders of all time, right, that have gained shareholders the most value. Think about Apple, think about Microsoft, right? These companies make so much money and they grow so fast, and they've pretty much fundamentally changed the way we've lived in our lives. So anytime you see a particular company, you know, trading into new highs, there's usually a reason for that. Now, you guys want to see something absolutely mind-boggling? Now, if you want to just park your car here in Manhattan for 1 month, if you want to park a regular vehicle, it's going to cost you $1,012 a month to park. If you want to park a limousine or a luxury vehicle, it's going to cost you $2,111.93. Okay? And if you have an SUV or a van, it's an additional $253 on top of the $1,400 a month that they're going to charge you. So it's kind of crazy. I mean, everybody talks about an affordability crisis in Manhattan in terms of places to live in an apartment. If you want to park your car in a garage, some of the garages, you're going to have to pay $1,000. I mean, that to me is just insane. I mean, is that not insane to anybody else? Anyway, check out this building. This building's pretty cool too. I think at one point this was in jeopardy of collapsing, and then they had to fix it. You could also get the 6 train here. Audible Compass, what's up? Hey, Swearworks, Bitcoin ETFs are buying tons of BTC, and it's just the first inning. If you're not in Bitcoin already, how many more signals do you need? So Swearworks. Dennis Ford says, good morning from the UK. Looks like a great city you got there. Yeah, I mean, you know, Dennis, we do the best we can. Do the best we can. New York is a great place. Thank you for joining us from the UK. This is East 53rd Street in Lexington. We got a little bit of wind action picking up here. But Dennis, check this out. Boom. We got the Chrysler Building, which is one of my favorite Art Deco style buildings in the city. It's just it's a peaceful night in Manhattan. What can I say? It's beautiful here. Hey, Carl Roth. What's up, Carl? Good to see you. Yeah, John Sunderland says SMCI has a relatively small float, about 55.5 million shares. And the crazy thing is, you know, look at the volume on that company over the past 2 weeks. I think they turned over about 25% of the entire float in a single day. Now, for all of those who are watching this that really don't understand what that means, for a company to turn over 25% of its shares in a day, you know, if you look at the up to down volume, that's like trying to, I mean, I don't know the analogy I could use here, but that's some serious firepower is in there, okay? It's not, Bill O'Neill used to use the old saying, you know, that's not your great Aunt Sally buying that stock. I mean, that's, you know, some serious firepower to get that thing cranking. I really like how New York has kind of kept these older buildings in the mix with some of these larger, newer office towers. I call these the more holdout buildings. So you still have a lot of pre-war mixed in with these new office towers. Hey, Mars Tech says good morning from Montenegro. Mars Tech, very cool. Thanks so much for joining us. I appreciate it. Wayne McKay says parking spaces could be considered part of the self-storage sector. Self-storage is booming. Yeah, I mean, parking is a little crazy, particularly in a place like New York City. You know, some people, I mean, if you think about it, some people's rent is $1,400 a month, right? To live in a place, you know, $1,400 a month you pay in rent. There's many New Yorkers who are paying that just to park their vehicle in a parking garage every month. It's insane. Crazy times. The next garage we pass, we'll go and check the prices in there too. Hey, Chris B, what's up? Good to see you. Troy Atman says, what's for dinner? Haven't eaten dinner yet tonight. I've been pretty much going at 100 miles an hour all day. So this is my only rest I've pretty much had all day. This is a cool shot of the Chrysler Building, East 51st Street in Lexington. If you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams every day starting at 8:30. We'd love to have you all along for the ride. Now, if you're just joining us, just a quick announcement. Today is Thursday. So I did just send out our free investing newsletter to the group, and we covered a lot. Okay, we talked about a lot of different sectors. We talked about small caps, micro caps, semiconductors, home builders, and the transports. So if you guys want to read that, just go ahead and scan the QR code on your screen and punch in your email, and it will drop the link to our Substack. I just sent it out to everybody. So make sure you, number one, check your email, and if you haven't signed up yet, you can just scan the QR code on your screen, punch in your email, and every other Thursday, right as the market closes, you will receive all of our market research for free, right as we head to Grand Central Station. Lance has got it, thank you. Appreciate it, Lance. Thanks for reading and sharing. Wind is just starting to pick up now. Hey, Marcos, his love from Argentina. What's up, Marcos? Good to see you. Welcome all of our viewers from Argentina. I always say this, but my favorite place in Miami is a place called Little Buenos Aires. It's located in North Beach, Miami, and it has a ton of good coffee shops, steakhouses, lots of culture from Argentina. And it was so cool because I was actually there. I was in Miami, in Little Buenos Aires specifically, right when Argentina won the World Cup for soccer. It was insane, incredible. There was, I mean, I'm not even exaggerating, there was thousands of people in the streets when Argentina won the World Cup in Little Buenos Aires in Miami, Florida. And I just so happened to be there for it, which was an amazing experience. So shout out to Leo Messi, who's actually now at Inter Miami. But I think he's only going to be here for a year, and then he's out. William, what's up? Good to see you, William. Appreciate you joining. Venturing out in the frigid temperatures for us tonight. Abdullah, thanks for joining. East 49th Street. Hey, Carol H. says, hey, Tom and friends, when are you back in Miami? So I will be back in Miami the first week of March. It's either going to be the last week of February or the first week in March. I will be back. And I'll probably be back for a week, which I'm excited about. So let's just say I'm very eager to be back in Miami. Let's just say that. Can't wait. Maybe I'll see you down there, who knows? Now, we talked about this a little bit already, but I was very shocked to see that the demand, particularly down in South Florida for the snowbird season this year, is pretty much as high as it's ever been that I've seen it. I was actually expecting it to taper off just a little bit this year, but when I listed my property, I mean, the amount of inquiry is a little bit overwhelming, actually. There's so many people looking to rent places down there for 2 months, 3 months, 1 month, particularly during the months of March, which is really peak sort of snowbird season. I thought the demand was going to taper, but it seems like the demand actually grew. Carol H, do you do real estate sales in Miami also? Yeah, we do. And we're actually opening an office in Mid-Beach very, very soon, like any day now. We just kind of have to tee that up. So yeah, I've actually already done a deal in Sunny Isles Beach. But it was with a little bit of referral business. But yeah, that's going to be a big push for our team this year, is to expand into South Florida, because we have a lot of customers, we have a lot of clients that have bought from us in Manhattan that need a place down there and vice versa, right? They call South Florida the 6th borough of Manhattan, right? Miami, the 6th borough. So yeah. DM, this is Tom. I love the La Botanica triplex with the outdoor spaces and teal cabinets. DM, I'm really happy to hear that. La Botanica is such a unique project, and I just filmed the property tour for that, and it's in the newsletter. I forgot about that too. So if you want to see the full property tour of our listing at La Botanica in the East Village, it's a 3,000 square foot triplex apartment with a private elevator and 4 dedicated outdoor spaces. So one of the outdoor spaces is a 450 square foot deck, kind of like you would have in the suburbs. It's right off the kitchen. It's, it's just an amazing property. And yeah, check it out. The building, I believe, only has 4 units in, but we have pretty much sold all of them. This is the last unit. It's on the market for just under $4.5 million. It's a deal. 3,000 square foot, so that means it's priced right around $1,100 a foot, which is not bad, right? Usually a 3,000 square foot triplex, I mean, if you put that in Tribeca, you're talking about $6 million bucks. So more. You're talking about 7, maybe 8 million bucks for a 3,000 square foot triplex in Tribeca. So sad about my dad. You never know. All right, I'm gonna show you guys my favorite dollar pizza slice place. Hey, Trevor, this is Tom. Have you ever been to the new Version Hotel by the Empire State Building yet? You know, I haven't stayed there, but we walk past it all the time. It looks awesome. I would assume, since its proximity to the Empire State Building, it's, you know, probably from each of the hotel rooms you could see the Empire State Building, which is really great. All right, maybe we'll duck into Grand Central to warm up a little bit. It's getting a little bit cold. But first, I'll show you the dollar slice place. Michelle says, Tom, will you do the live streams in Miami? Yeah, we do the live streams in Miami all the time. They're some of my favorite places to stream. It's beautiful. See the flags whipping in the wind. Hey, Carl Roth, this is Tom. The Canadian population is growing in Florida because they love Ron, the governor. Now, there's always been a lot of Canadians in South Florida, particularly in the winter. Every time I'm down there, I see license plates from Canada. Tons and tons of Canadians. That's another good point. The population in South Florida really balloons. There's not too many people if you live in the Northeast. You don't want to be outside in the whipping winds and the 20 degrees, freezing, right? Unless you're doing a live stream. All right, so we are now looking right at Chrysler Building. We are literally standing right below the Chrysler building. Carol H is great news. Good to know. Yeah, you know, I'm looking to do a lot of business down there. So today actually was a really good day. So today, we've filmed a property tour of this unit as well. It closed today, so I was actually at the closing. So today was a good day. 139 East 23rd Street, Unit 2. If you guys want to see what that unit looks like, that I sold and closed today, it was under contract for a while, but today was closing day. So it's all finalized. If you type exclamation point 23 in the chat, so exclamation point 23 in the chat, the Nightbot will drop the link to that property tour. It's a full floor unit, 1,500 square feet, with about 540 square feet of outdoor space, right in the heart of Gramercy. The last asking price was $2,495,000. And the closing was today. So I think it was a great deal for the buyer. Super happy for him. Oh my gosh, guys, talk about inflation. It's now $1.50 pizza place. This used to be the best dollar slice place in the entire city. Now it's $1.50. Crazy. Talk about inflation. That's a big increase, right, on a percentage basis. That's huge. Anyway, if you guys are wondering, if you ever are at Grand Central Terminal, if you come out on the east side, okay, don't go out on the west side. If you come out on the east side, right behind the Chrysler Building is the best, I'm talking the best dollar pizza place in the entire city. Well, I guess $1.50 pizza place. in the entire city. And it's right on the corner of East 43rd Street in between 3rd Avenue, okay? Man, $1.50, unfortunate, right? Troy Atman, Troy's like $1.50, can't do it. Just can't do it now, I know. I'm actually really surprised to see that, by the way. Man. No way, everything in Miami says that place got busted for charging more than $1 by some YouTuber. The guy asked for $6 and she gave him $2. Oh my gosh. You know, you gotta watch out for that if you're a tourist, right? In Manhattan. ETC333 says, I remember that place. Congratulations on the closing. I appreciate that. Thank you so much. NBA Elias. Now, NBA Elias, you're just in time for the $1.50 pizza spot right here. But ETC33, thank you for your very kind words. Not gonna lie, I'll probably still go there. Haven't gone there in a long time. Look, I shouted out it's a good product. Now let me clarify here before we have the viewers head out to this pizza place. It's good for a $1 slice place. Does that make sense? So it's good for the $1 slice category, not good for the real premium stuff in Manhattan. But that is like the creme de la creme. It's like the per se. It's like the Al Coro, the Maria, the Jean George of $1 slice places. All right, let's cross back over to Lexington and go inside. Hey, and go inside Grand Central. Because I'm freezing here, freezing.
That's where you stop. That's where you stop.
All right, so this is the east side of Grand Central Terminal. When we go in here, you guys are really gonna appreciate the architecture in here. It's stunning. This is a stunning terminal. Look at this. You have these beautiful chandeliers, all this great architecture. It's gonna look even better in a minute. Look at this. Isn't that cool? Very seldom do we ever walk over this side, but Grand Central Station is beautiful. In my view, I think Grand Central Station is probably, I would say it's the most beautiful train station in America. Everything in Miami is going to the Campbell. I was actually there, not last weekend, a few weeks ago, and it's so packed. It's always so packed in there. But that's a good recommendation. So if you guys see everything in Miami's comment here, if you're visiting New York and you're looking for a very, very cool place to go that a lot of people don't widely know about, if you walk all the way through the terminal here, okay, well, I might as well take you there. We can't go inside, there's no filming there, but I'll show you where it is. If you go all the way to the back of Grand Central Terminal, okay, through the main terminal, up the stairs and to the left, there's gonna be a bar. It's called the Campbell Apartments. And you gotta look it up on Google Images. It's a stunning place. Apparently, it used to be the office for the guy who ran the trains. I don't know the whole history of it, but it used to be an office, and now they've converted it into a bar. So if you're waiting for the Metro North or the Long Island Railroad, it's a bit pricey, but you're really paying for the experience. You're paying for, you know, the ambiance of it all, I guess. Jessica says, what does the area where the actual trains come in look like? Well, let's find out right now. We'll bang a right and I'll show you. So you're gonna see a clear distinction here, Jessica, okay? You're gonna see the Long Island Railroad trains, and you're also going to see the Metro North trains. I'm sure you can tell the difference, right? The Metro North is the red. Oh, I guess they also have the other ones, yeah. But usually, Long Island Railroad cars look like this, and Metro North cars look like the red, but apparently they're both Metro North. So this is where you catch a train if you come into Grand Central Terminal. It's pretty cool. I don't really take the Metro North that often though, to be honest. But here it is. It's a pretty basic train station, right? This is Merry Christmas right there. Ah, that's right. Yesterday 15. I remember that. And then this is back into the main terminal. Hey, Edward Adams, what's up? Now they also just added the East Side Access Project, which is down here. So under the ground, they finally made the East Side Access Project, which will allow the Long Island Railroad to enter Grand Central Terminal, which is great if you're a Long Islander and you work on Park Avenue. Now you don't have to go all the way to Penn Station anymore. You can just come here, which saves a lot of time. So. Troy Atman says, what's the furthest you've gone on the train? I took the Hamptons line once, and that took like 2 hours. So I'd say all the way out east to Montauk.
Attention customers, for your safety and the safety of others, please do not sit on the floor or stairs at Grand Central Terminal. Thank you for your cooperation.
All right, let's head up and out on the other side. If you're enjoying the tour of Grand Central Terminal, feel free to leave a like on the video and click the subscribe button if you're new. We do these streams every day starting at 8:30. You know, since we're in here, we might as well check out the Whisper Wall, which is downstairs. Hey Trevor, Tom, do you feel like New York City is safe, or is Fox News leaning into an election cycle narrative? Generally, look, so here's what I'd say. A lot of the stuff that's reported, it's not like fake news, it's true, right? There's a big problem now with the migrant crisis, you know, migrants committing crimes. Obviously, it's not all of them, right? It's not all, but there are some. There's some really, really bad actors that have been, you know, partnering with gangs, doing, you know, robberies on mopeds and, you know, beating up police officers, shooting people in Times Square. And those are all real stories, right? Those are all real stories. But generally speaking, I feel very safe in Manhattan, in the city. It's just, there's a select few hot spots right? I call them a select few hotspots in the city where activity gets a little bit rowdy, so to speak. And those areas are really near the Port Authority bus terminal, specifically, in and around Penn Station and the Penn District. So you're not going to see, widespread stuff, on Park Avenue and where I work, right? But in Times Square, where there's a lot of tourists, the migrants will go and rip people off, steal, pickpocket people. But again, it's not all of them. It's a very, very select, very few, very little populace that are coming here to take advantage of the situation, which just so happens to make everybody look bad, right? It's the same with all criminals. So I'd say there is truth to it, right? These stories are real, and the migrant crisis is devastating the city, both, physically and financially. But if you come here as a tourist, it's a safe place, right? It's very, very safe in Manhattan. It's just there's isolated bad incidents, bad actors. Hopefully that answers your question. All right, let's go up and out. Looks like there was a Rangers game tonight. Wonder if they won. So one of our listings at 5 Franklin Place, we're listing the apartment just below just below a very prominent former New York Ranger. Okay, now we are outside of the One Vanderbilt building here. Hey, Trevor says thank you. Great answer. We are going for our honeymoon around Christmas. Oh, dude, you're gonna have a good time. You're gonna have an amazing, amazing time. Particularly coming here around Christmas, right? Now, I know exactly kind of what you're thinking, what you're talking about. There's a lot of people, particularly like political analysts that are right-leaning, that say, oh, you got to get out of cities, you need to flee cities and, hang out in the woods and buy canned food and all that. I think that's all nonsense. That's like clickbait nonsense. And I'm a right-leaning person, right? I'm a conservative, right? But I'm also a realist. And New York City is a great place. It's a great city. There's a lot of money to be made here, okay? And, just like with any city in the world, there's issues. Okay, there's no perfect place. Any major city that you go in the United States, you're gonna have issues, right? You go to New York City has its own issues. You go to Miami has its own issues. You go to San Francisco, they have its own issues. You go to Dallas, well, on and on and on and on. It's big cities, a lot of people, it's diverse here. So, and if you look back throughout the history of New York City, it's also a very cyclical city, right? It goes through cycles. But if you compare the safety of New York City now than, let's say, in the 90s, New York City is so much safer now, like super, super safe now. compared to what it was like when my parents were growing up. I mean, you can't even make the comparison. Look at this beautiful shot of the Chrysler Building and the brand new One Vanderbilt. Hey Kimberly, what's up? Hello Tom and chat. It's been a while. Kimberly, thank you so much for joining us. NBA Elias says you can't let Fox News or CNN or MSNBC scare tactics discourage you from traveling. Oh, 100%. 100%. You just gotta, be normal and be alert and look alive. Have your head on a swivel, But, New York City is a very, very fun place. I'll say that. Extremely, extremely fun. You got Rangers games. Everybody's out having a good time. It's fun here. Now, I think this place coming up used to be one of the oldest tobacco shops or something like that. Let's see what it is now. Oh, now it's going to be a cannabis experience. Maybe some of the OG New Yorkers in the chat could help me out here. I forget the name, but this building right here used to be one of the original cigar places, like tobacco. I forget, they used to have like an Indian statue out here. It used to be very cool. I forget what it's called, or what it was called. COVID, put the final nail in that coffin, unfortunately. I know, well, what a heartbreak that was, Brad. Crazy, right? Brad says, just need to be aware at all times. 3 complete wastes of oxygen. Heard a lot of people in Kansas City parade. I know, man. I mean, what a disappointment that is, right? I mean, people are just trying to go to a parade to have fun for the football. Sick. Ah, Meld, it was Nat Sherman. Thank you so much for that, by the way. I totally was drawing a blank. Yeah, that was the original. It was a very cool place to walk by. It was a New York City icon. Troy Atman says, Tom, who do you think the best CEO is right now in the world? I think my answer is going to surprise you, Troy. Right now, it's Mark Zuckerberg. By far, in my view. I think the best CEO in terms of performance right now is the CEO of Meta, Mark Zuckerberg. I mean, to be able to turn your company around from devastation in under a year to a freaking powerhouse, right? Tripling profitability. The award for me goes to Mark Zuckerberg. And I'm not like the biggest Mark Zuckerberg fan, okay? But I mean, that turnaround is just impressive. I honestly don't know how he does it. You guys ever just think about certain people, like super successful people, and you can't even wrap your head around like how they possibly do the things they do? For me, Zuckerberg is one of those guys. Another one would be Elon Musk. I just don't understand how they have the bandwidth to do all this stuff. It's crazy. I don't know, what would you guys say if you had to pick the number one CEO in America right now? What would you say? Hey Mohammed, what's up? This is Tom, good to be here with you today. Thanks for walking in the cold. No problem, Mohammed, good to see you. I mean, Tim Cook is probably in the top 5 for sure. Yeah, 222 Ants. Zuck is doing well for the shareholders. Absolutely. Hey, Vinny says you were right about San Francisco. Big tech CEOs are getting into politics to fix the city. Oh yeah, 100%. I was hearing rumblings about that you know, a little over a year ago. So that's kind of why, you know, I'm bullish on San Francisco. That's going to get cleaned up. Trust me. Ooh, NBA Elias. That's a good one. NBA Elias is the CEO of NVIDIA. Jensen. Yeah, gets my vote. You know, wow, I totally, I don't even know why I didn't even think about him. You know, I still think Zuckerberg gets the trophy just for the turnaround story he got there. I mean, his stock was down 77% all the way back to record highs. Dustin's Jeff Bezos. Well, Bezos isn't the CEO of Amazon anymore. But okay, I get what you're saying. Like Jeff Bezos back in his prime when he was the CEO of Amazon. All right, let me read some of the other comments. Everybody's saying Elon Musk. Joel PM. Yes, Della, the CEO of Microsoft. You think he gets the award? Hang with Mark Moms. Good evening, Tom. Mods in chat. We are at Pine We are, and it's windy as all you know what. It's so windy tonight. I'm sure you guys could hear the wind in the microphone. Yeah, but I'd say, you know, Tim Cook, obviously, I mean, just the amount of money he's returned for shareholders is just unfathomable. Who else we got? I think Zuckerberg gets it for the turnaround story. You know, I think it's just a person that sets a good example. And this may be a controversial one. I think Jamie Dimon is the best Wall Street CEO by far. So if you want to talk about CEO ahead of one of the biggest banks in America, I think Jamie Dimon gets that award for sure. Meld is not sure about current, but Howard Schultz is my all-time favorite CEO. I mean, talk about returning value for shareholders. I think you got to read all of Howard Schultz's books. A fantastic story that guy has. Although I do disagree with Jamie Dimon a lot, particularly about Bitcoin. You can see the ball at the top of Times Square. Hey, hang with Mark Mom says Florida was awesome weather today. We're predicting rain and getting cooler by Sunday into President's Day. Oh yeah, that's right. So it's President's Day on Monday. So we're gonna have an enjoyable long weekend. I completely forgot about that. So happy early President's Day to everybody. It's gonna be a bank holiday. Now, if you want to talk about all-time CEOs, oh, that's true. NBA Elias is Jack Welch of GE, a legend. I mean, after that, GE tanked. I think all-time, Mark Benioff is definitely in the top 5. For sure, in the top 5. Oh, I think this guy left something in this taxi. He's running after it. Oof, that's tough. Hope he gets it. I mean, good thing there was traffic. or that taxi would have been long gone. Hey, Dan Sang, what's up? Says the weather's been crazy. Yeah, it was 60 degrees last week, and then we had a mini snowstorm, and now it's just freezing. So it's been nuts. It's been wild. All right, we are now at Times Square. We get the NQRW shuttle to Grand Central Station 1237, or the ACE via 8th Avenue right here. Now, do you guys remember on a previous live stream, we actually went down into Times Square, and we were looking for the new NYPD robot. Anybody remember that? I guess they remember that. But the NYPD robot is no more. I guess they fired him. So we spent, I think, what, $2 million on that robot, and it was on the job for like 2 weeks. So, anyway. You can see the increased police presence here after the shooting incident last week. But for those of you who are just joining, just a quick announcement. We did send out our free financial newsletter just a few hours ago. So go ahead and check your email, because we did send out the Behind the Street newsletter right at the market close. So make sure you don't miss that. We cover a lot. We talk about a lot of different market sectors. We do a breakdown on the transports. We talk about semiconductors, small caps, micro caps. And we do a deep dive into the Institute for Supply Management PMI numbers. So if you want to be subscribed to our newsletter every other Thursday, you will get that. All of our market research for free, including New York City real estate property tours. Just go ahead and scan the QR code on your screen, punch in your email, and you'll be signed up for the Behind the Street newsletter. So go ahead and check your email, because it should be there right now. Somebody's saying Michael Saylor. You know, interestingly enough, Michael Saylor could be one of the greatest CEOs of all time. I mean, if Bitcoin makes new all-time record high this cycle, I mean, you know, do the math on MicroStrategy. The amount of Bitcoin that guy's loaded up on his balance sheet. The guy's gonna look like a genius. It's a pretty busy night for Times Square. Thursday night in Manhattan. Now all these cars will go straight down to 34th Street. This is going to be Penn Station. Wendy England says you got it. I appreciate it. Thanks so much. You know, I don't know. Peter says, was there a reason given for the robot's decommissioning? I'm not too sure, to be honest. Somebody sent me an article about it. I just didn't have enough. I didn't have enough time to read through it, but it seems a little weird, right, guys? I mean, the NYPD spent a lot of money on this robot, right, to go down and patrol the Times Square subway station, and then, you know, it was there for like what, 6 months, and then they took it out. Was there a reason for that? Were people like messing around with the robot? Anyway, I don't know. I know DJ's his second Michael Saylor genius turning a company around. So it was an enterprise software company that he essentially made, you know, an impromptu spot Bitcoin ETF out of. It's hilarious. Yeah, Michael Saylor is a crazy. Hey, Kazi Hassan says, hey, new subscriber here. I'm a lifelong New Yorker with a recent job with a high income. Any tips on how to diversify investments? Thinking real estate, but not sure where to start. Oh, well, awesome. Congrats on the new job. It's fantastic. Yeah, I mean, I can't, you know, dish out specific financial advice, but what I would say is the following. If you're in a career, right, where you have a very high income potential, I would first put all of your effort, right, all of your effort should be into growing that income number, right? So I don't know what industry you're in, but let's say, you know, you work at a major investment bank, you know, and you have a clear trajectory to making it to managing director, right? Which, if you make it to managing director, your total comp is probably going to be, you know, anywhere from $750,000 to over $1 million, depending on where the bank that you're at, right? I would focus on getting so good at your career, making so much money, and then once you've accumulated a lot of money, you can make very big concentrated bets into a very few sure things, right? So it seems like you're in a really good career with a great income trajectory. I would double and triple down on that, because a lot of times what people will do, you know, they'll say, oh, I got 10 grand, I got 100 grand. You know, I'm going to try to focus all my time and energy on growing that, you know, 10,000 into, you know, 3, 4, 5, $20 million, right? When your time would probably be much better invested getting really good at a skill, to transact that skill in the marketplace, to trade for money, right? Now, if you want to be in the money business, the investment business, and, you know, trading money, then I would go work at a very notable hedge fund or something like that, or raise other people's money. You know, go the OPM route, raise a bunch of money, and then, you know, you'll have a big AUM. But I would say if you're in New York City, you're a lifelong New Yorker, you're in a great career, you know, double, triple down on getting that income insane. And then after that, focus on maybe picking 3 sure things that you know a lot about. You know, I don't know you, but maybe you know software really well. Maybe you know the real estate business really well. I would make 3 huge, large, concentrated bets, and I'd watch those bets very closely. Because if 2 of those bets pay off, you know, you're gonna have a triple, a double, right? A quadruple. So you'll figure it out. You're a smart guy. But thank you for watching, by the way. We appreciate you being here. I think your name was Hassan. Let me see. Yeah, Kazi Hassan. Oh, you're in tech. Great. Yeah, that's a very high earning potential career. I was in tech sales for about a decade, and it is a very lucrative career. So yeah, hammer at it for like 5 or so years, and then maybe, you know, you want to work at a startup or something where you get equity, and then you could try to build that startup into something big. Or maybe you start your own startup and you do your own thing, right? You raise a bunch of money, you take the company public. You know, it's all possible, man. It's all possible. You know, I never understood why they closed down those red steps at a certain temperature. Maybe they just don't want people to slip and fall somewhere. Hey, Victor C, what's up? Someone says the robot would babysit the real cops. I don't know. So just up here is actually the old office of Lehman Brothers. Now it is Barclays Investment Bank, which is a British bank. Now, another thing that we briefly wrote about in the newsletter that I just sent out like 2 hours ago is that everybody is calling for the Federal Reserve to cut rates, right? That's the biggest topic. Everybody talks about, you know, when are rates coming down? When are rates coming down? Well, I don't really think they need to come down, right? And I think people need to understand, you know, I think people need to understand what monetary policy is, okay? And if you look at the history of monetary policy in America, we are still technically in a very relatively low interest rate environment historically, right? So the current Fed funds rate is in a range of 5.25% to 5.5%. And all while the stock markets are at all-time record highs, right? The S&P 500 closed back above 5,000 once again. Number two, unemployment in America is at decade lows, right? We almost have full employment, so people are doing really well. Number three, if you look at money market balances, okay, so if you go to the St. Louis Fed website, okay, the St. Louis Federal Reserve website, and you look at money market balances, there's about 6.5 trillion. Okay, I'll say that one more time. $6.5 trillion in liquidity on the sidelines in money market accounts, which are essentially just, you know, very liquid accounts that invest in, you know, treasuries that right now are roughly yielding, you know, 4.5%, 5%. So you have all of this liquidity on the sidelines. You have unemployment near decade lows. You have stock market at all-time record highs, and you have the housing market still relatively competitive, and housing prices really haven't come down much. So why would the Fed, with all of that data we just discussed, why would the Federal Reserve say, yeah, we'll just go ahead and you know, cut rates and put more monetary stimulus into the economy? It just doesn't make sense. And what the market is telling us is that the market doesn't necessarily need lower interest rates right now. The thing that the market wants is just to know that interest rates aren't going to go up anymore, because the market wants stability and the market wants predictability. And I'll give you an example. You know, and we did a deep dive into the Institute for Supply Management's Purchasers Managers Index, the PMI numbers. And if you scroll down, if you go to the ISM PMI website and you scroll down to the section where it says what respondents are saying, one of the things you'll notice is that one of the comments on the most recent report is that due to, and I'm paraphrasing here, so just go look at the actual primary source, I'm just sort of paraphrasing. He said that since the hiking cycle is over, we feel more comfortable with taking on additional debt to expand the operations and grow the business. Because CEOs of major companies aren't going to take on additional debt if they run the risk of having that debt become more expensive, right? The debt servicing would be increasingly difficult, right? So the market has essentially verified that 5.25% to 5.5% Fed funds rate isn't the end of the world. You could operate in that environment. You just need the market to adjust to that environment. So if I had to give a piece of advice to the Fed chair, and I don't think he needs it, he's done a fantastic job, even though I don't like the Federal Reserve, I would say don't cave into this nonsense, because if you cut rates too soon, I mean, you're going to let the inflation genie out of the bottle once again, right? And you're going to repeat the same mistakes that happened prior to former Fed Chair Paul Volcker, right? What happened is we cut rates too soon, inflation went rampant again, and then the current, or I would say the former Fed Chair, Paul Volcker, had to hike interest rates 20% to kill off inflation. So we just got the last CPI report out, and it came in at 3.1% when many economists were expecting 2.9. Now, the Fed's dual mandate calls for 2% inflation, right? So it's coming down, it's on its way down, it's gonna get to 2%. So just chill, okay? You could even leave the Fed funds rate at 5.25% to 5.5% for the next 2 years. You know, I would say just chill on it. We don't need to be cutting rates too soon and mess up a good thing. That's kind of what I have to say. Hey, Alan says, Tom, as someone who works in the auto industry, I disagree. People are getting turned away more than ever for vehicles due to tighter lending practices, which takes money out of my pocket. No, I totally get it. I totally get it. But look, I understand. But I mean, at the end of the day, it's like these people aren't qualifying, I guess, for a reason, you know, because money is more expensive now. So deal flow contracts in all sorts of categories. But I think if you cut too soon, right, what that really gives the audience, what that gives the populace is the appearance of being able to afford it by just being able to afford the payment. Does that make sense? So I understand where you're coming from, and I think it's a great comment. And, you know, in my industry, I'm experiencing the same thing, right? If anybody here is in real estate sales, both residential or commercial, transaction volume totally fell off a cliff. 2023 was the worst year ever for existing home sales. So think about all the realtors that made all this money, right, in 2021 when money was essentially free. People are starving, right? People are making no money right now in the real estate business unless you're like a top broker. So I get it. You know, those rate sensitive industries are going to have a little bit of a decline, but I would say if, you know, judging from your statement, right, a lot of people are getting turned away, so the demand is there. Imagine if we lower the rates, the demand is going to come back in a tidal wave and we're going to get another inflation push. That's the concern. But look, that's a good perspective. I'm glad you put it in the chat. It's something to think about. It's an interesting balancing act. Yeah, I know Alan says, I understand and agree. It's just frustrating because I'm losing money every month. That rates remain where they are. More and more banks are getting stricter, and it's tough to overcome. No, I get it. It's an interesting balancing act. It's a really interesting balancing act. And I would say I'm going through the same thing, right, in the real estate business here in Manhattan. Now, the only thing, right, and I'll give you guys an interesting data point here. So I've sold 2 properties this year. In 2024, I've sold and closed 2 deals. That's it, 2. One of which was a 2-bedroom, 2.5 bathroom apartment in Brooklyn, New York for $1.5 million. And the second one, which just closed today, was a 2-bedroom, 2-bathroom apartment. It was about $2.4 million deal. Does anybody want to take a guess at what the commonality between those 2 transactions are based upon the conversation we were just having with Alan about interest rates? Does anybody want to take a guess? Because this exactly ties into what Alan is saying in his comment about people are having a hard time getting financing right now because debt is a lot more expensive. It's so interesting to see how this all ties in together. Yeah, unpopular opinions is first-time home buyers are nearly wiped out in my market. I've tried helping several, but despite having bank approval, they just couldn't afford it. Yeah, it's crazy. I mean, people were getting, 3% interest rates. Now it's 6.5%, right? Sometimes 7, depending on credit quality. So, I mean, that's going to double. Yeah, 3T3 Joel PMs is their cash deals. Yep, Jeff W277 says they paid cash. Isn't Isn't that crazy? The only deals that I've done, and I've only done 2 deals this year. I mean, the market's been slow, and I've had to like grind and fight for those deals. I'm not complaining, you know, but they've all been cash buyers. All been cash buyers. Now I'm working a few deals, right? Hold on, I just gotta plug my phone in. Apologize. Brief intermission. Brief intermission here, guys. You know what, guys? I apologize. I was so busy today that I'm totally disorganized. I don't have my phone charger with me. So my phone is gonna just die on us any second. So, yeah. Anyway. Man, and this was a good conversation. That's all right. But anyway, yeah, you're right. So with interest rates being so high, right, and Manhattan is a very interesting type of market. I would say New York City in general is a very interesting market because, you know, in New York City, a lot of people have money. There's a lot of foreign buyers. There's a lot of people have money. So they can afford to pay cash for a $1.5 million apartment and a $2.5 million apartment. So, yeah. But anyway, guys, let's go ahead and pick up where we left off tomorrow. I want to thank all of you for joining the live stream. If you enjoyed the conversation tonight, feel free to leave a like on the video. Click the subscribe button if you're new. Again, just a quick reminder, we did send out our free investing newsletter to the group just about 2 hours ago. So go ahead and check your email. And if you want to sign up to receive it, if you're not signed up yet, just scan the QR code on your screen and punch in your email, and you will be signed up for our Substack. We publish every other Thursday right at the market close. We talk about all the stuff that we speak about on the stream. The US equity markets, emerging markets, fixed income, monetary policy, all that good stuff. Yeah, I gotta get some sleep. We'll regroup tomorrow, and have a good one. Thanks everybody for joining. Appreciate it. So Carol H, thank you so much. Lynn, Stephen Bates, Kimberly, Joseph Hardaway, Hang with Mark Mom, all of our moderators, Sally, Todd and Tara, Joel PM, UniJ23, B Cruz, Muhammad, Yesterday 15, Troy Atman, 222 Ant, appreciate it. Chris B, Bree Grams, Teresa Diaz, Two Wheel Freedom, thanks so much for joining. Dale, John, Ali Star, Meld, MBA Elias. There's always a bull market somewhere. You just need to know where to look. Be blessed. See you later.